Hello ladies and gentlemen, welcome to this new video edition of the Trade Zone at Eightcap. This is Ashraf Laidi. It is finally happening. The signal is being warned about a few weeks ago, actually in each of the last 3 or 4 videos, and copper has broken above the trend line resistance. Silver has broken above the trendline resistance. This means that this 2010-2015 dollar trend in gold is serious. Okay, maybe all we need is for the XME ETF to be breaking above the ETF, but basically the silver here is broken above the trendline resistance. Copper is broken above it, and this takes us to these patterns. How far are we going to go now? Are we going to 2070? Are we going to 2080? Is this happening? Well, here is the story. Basically, it is the 10%, 38%, and 5%. Again, I'll say it again. It is the 10%, 5%, and 38%. What does that mean? Basically, if you look at gold chart on the daily chart, you will basically see that since late 2019, whenever gold hit a major low, okay, it went up, and it went up to rise 10%, okay? It would go up 10%, retrace 38, and if it retraces no more than 38%, it holds, it goes back up to those 10% highs, and then add another 5%. The only exception was here, okay? This was the exception. We went up 10% and we came down and we hit a new cycle low. But here, starting from 2021 April, we went up 9.6%, retraced 30%, 23%, and then we went up another 5%. It happened here. It happened here. It happened here in March 2023, March of this year. We went up 10%. You see this? We went up 10.9%, okay, and then we retraced 38%, and then we added another 5%. So the idea is that, and it happened here. So this was the 1810 low. We went up around 10.9, 11%. We retraced 38%, and now we're going back up. Are we going to go another 5%? 5% of 2,000 is 100. So this means that the new target is really 2,070, 2,100, and $30 couldn't be realized anytime. Within a day, such a difference. I'm going to focus on the Aussie, and there's an important indicator. So this is basically as far as another tradable play. We've broken above 65.90. Remember, 65.90 was a 200-day moving average. We were targeting it, but then some people were saying, "Hey, can we issue a quick short?" No, don't waste your time. Don't get fancy there. This thing is going to 66.50 because we looked at the weekly chart on the trend line. Okay, we were targeting 65.90 on the 200-day moving average. You can see it in all the previous videos that we did. Actually, the recent videos that we did 6 days ago, 10 days ago. We even did an attempt at doing a live stream on Friday. But basically, these were the key videos that we did, and in each one of them, we talked about the 10% levels. We talked about 5% and the retracement. We also talked about. We said what we need is for copper to break the trend line resistance, but more importantly, is silver. When you have silver pushing higher, that is a confidence play that gold is going to go to 2070. Now, before I go back to the Aussie, I just want to say, is there something else in the data out there that could actually give you an idea or give you confidence or get you ready to push higher above 2070? So let me just tell you what I'm looking at right here, okay? If you look at this, so let's just click on this. So if you look at the PCE, the core PCE, which is due on the 29th, that means it's due on Wednesday at 8:30 a.m. US New York time, Eastern time, okay? 1:30 p.m. GMT/London, because right now GMT is equal to London. Basically what you're seeing is that the core PCE, what you're looking for really, so this is the GDP, but I'm looking for the core Do we get the core PCE this time today? Actually, I am mistaken. Let me see. 30th. Do we get the core PCE? I'm looking for the monthly number, not to be confused with the quarterly part of the GDP. Yeah. So, this is the part of the GDP. So it's not as important for inflation, but this is sort of the GDP print. And so for the PCE, you just need to look at the personal consumption expenditure, which is this 4%. So if it stays below 4, if it goes back to 4%, that could be sort of neutral. But I think we're getting into a territory here that even the numbers, we're no longer going to go into a territory where weak numbers are good for the market because inflation seems to be low. But I just want to make sure again. I'm looking at the personal income, personal spending. I thought it was going to be this week, but it's not. Let's just make sure. No, it is not. No, it is not this week. So the only PCE we're getting is the quarterly one, which is part of the GDP, which is important, but not as important as the inflation equivalent that the Fed is looking at. Okay. Relatively light day. The day before Thanksgiving, the week before Thanksgiving and after Thanksgiving, they're relatively quiet. But yeah, and then we're gonna have but jobless claims is still there. Actually, yeah, it is the personal. This is the important one. So yes, I misspoke. Thursday, ladies and gentlemen, Thursday the 30th is personal income. So what you're looking for this Thursday could be the number, could be the day where we really could be triggering, breaking of stops in gold and metals, because what you want is the core PCE year on year. If we go back towards 3.5, that is very bullish for metals, okay, very bearish for the dollar. This is what you're looking for PCE. But I believe we're doing a video on Thursday, so we'll be doing a video before that. So let's just go back to the charts here. And actually, before I go back to the chart, I just want to have a look at this view here of these 12 charts. People have said, what are these graphs that you have? So let's just go through them. So this is basically the regional banks in the United States. Remember that part of the regional bank which was really under pressure. So we're seeing nice rally here. The indices are pushing nicely. 10-year yields have bounced off the day moving average, but they're still failing 4.6. So just like dollar yen used to have a support of 150, and now it's resistance. It seems that 4.55, 4.6 in the 10-year yield is becoming the new resistance. This is oil. It seems that there is these issues with OPEC, and as long as there is a lack of agreement regarding the cutting of supplies, I think that we could probably bottom in the middle of this week. We could go towards 73, 72 before we push higher. Gold to silver ratio, this has been a very important favorite metric of mine. As long as it falls gold divided by silver, then this is very good news for gold versus the dollar, silver versus the dollar, and it's bad news for this thing called the DXY, which is now falling second day in a row below the 200-day moving average. Okay, so going back to the Aussie, and let's maximize this. Basically, if you go back to the Aussie, and if you look, this is a great chart. When you see a spike above these key moving average, this is always great. This above the 200-day moving average is the yellow. It reminds me of this one here. But you don't need to play the memory games. You just need to look at the weekly chart, and then you look at the simple trend line resistance. I'm going to go to indices in a bit, but you look at this weekly trend line. Actually, the money is not in indices right now. The money is really in currencies. The currencies that have yet to push higher against the dollar, like this, like the Aussie. And with the help of CNH, the dollar falling further against the yuan, this basically said there is more upside in selling the US dollar versus the Aussie than the euro dollar. But this is the nice chart, the weekly charts here, where basically what you're seeing, if you look at the trade line resistance, you will see that the purple 55-week moving average around 66.40, 66.47, and the trend line resistance around 66.60. This would be your next target. Just to look here at the at the charts. Basically, the key levels have been broken. There was an important gap, what I call it gap resistance there in indices, and again it was 4570 in the S&P, and it was 1670 in the Nasdaq. So you can see these at your target. So 1670, even though this was the cash, right now the CFDs, if you're trading it, the Nasdaq is around 15,963. So there's a 100-point margin for you to be targeting the next key level, which is a big trend gap resistance, which I identified in previous videos. And the S&P, if you look at this, if you maximize this, you will see that 45, so where we are right now is 45.53, but your really gap resistance is 45.67. Once we break that, we could be going easily towards 45.90, okay? And let's just, and again, so we talked about the 10, the 10%, 38%, 5% level here, okay? And, but let's just finish with the euro dollar, because really that's where the major upside is. If you look at our first video, our second video, since I started doing these, it was this recurring pattern here, and we basically wrote the market is going to rally when it is ready to rally. And now that it's pushed higher, it seems that 110 is always a nice psychological resistance. But what we're saying is that I think 110.80 is really going to be the next key level. Let's just stop it here, and we'll resume on Thursday, and we'll talk more. Good luck and all the best.